It's a top net trade day. Joining us now, Knuckman, the chief market strategist for BullseyeOption.com, having fun in the sun while he watches the market. And Phil Flynn, a Fox Business Network News contributor, here for our Trader Game. Round number one, cheap financing. Bank stocks have become bargains following the regional bank troubles. Which one is bad enough to buy?
Well, this is not 2009. We're 550% off those banking crisis lows. We've had XLF, which is the ETF that tracks the big banks, 15% off its February top. So instead of taking individual bank risk, because you just don't know, anything can happen to anybody at any time, that's why an ETF is really a good vehicle. The PE here is 14. And let's remember what the market hasn't done. The S&P is above where we were when this started on the 9th of March.
You know, a lot of people believe that what happened with the Silicon Valley Bank and what happened with Credit Suisse really gave a black mark to the entire banking industry, where they really believed that it wasn't a banking issue, but a mismanagement issue. And it really came to a situation where some of these banks did not correctly manage the risk. But I think at the same time, I think some of these banks got in trouble because the Federal Reserve continued to try to micromanage the market. You know, anytime the interest rates didn't look like they were going to go up, they'd make a statement, try to manipulate the market. They should tell the market where they think it's going to go and then be quiet. And it'll be good.
They couldn't have been any more clear over the last year. I have never, ever in my life heard more from the Fed and more guidance, and every word was well planned. We know rates are going to go up, and you can't tell people exactly. You've got to be able to do your job, and that's what they've done.
I agree with you, but my problem is that when the market didn't believe them, they didn't let the market figure that out on their own, and that was where the problem is. That's why the regional banks are a little bit more of a risky bet right now. If you want to go in banks, go in J.P. Morgan, go in the big banks, because they are going to do very, very well. And I think because we're not getting an implicit guarantee on all deposits, the bigger banks are going to benefit.
Round number two, rate, road, end. The Fed says it will be one and done with hikes, but what commodities are best if hikes do go on hiatus?
Well, I think right now the Federal Reserve and what the markets are saying are two different things. Fed Chairman Jerome Powell says, hey, no rate cuts this year. The market has a different idea. If they're pricing in a rate cut later in the year, whatever you believe, we believe that we know that the end of the hiking season is ahead of us. And that's going to bode very well for a lot of commodities. We've already seen a big run up in gold that got back up above $2,000 an ounce. Platinum, palladium, copper, they're all doing very good. But I also think the oil sector, they've been struggling a little bit because they're so involved with banking. We saw one of the biggest pullbacks in investment in oil. We think that's going to be a sleeper. We like oil stocks and we like oil.
I agree that we've been talking about oil being an opportunity for a long time here. Now, the Fed has accomplished its goals. It knocked oil down. It's knocking down inflation, and the market has been stabilized. We've seen rates come down. But if we look at crude oil's got a lot of price pop potential. If you look at XLE, the energy ETF, again, it's not a direct trade in trading crude oil, but you're looking at the energy stocks. It's been between 70 and 90 for a year. It's right at this 80 level right now. The PE is 8. That's why I'm an options trader, because I'm looking at December options, January options. A lot can happen in the next 6 months. And I think there's a huge opportunity here as the dollar doesn't get any more strength with no more rate hikes happening anytime soon. Maybe one little one, maybe one little tiny one.
Round number three, tech takeoff. Microsoft and Apple are outpacing the S&P. What does that mean for your money?
Look at that. Nobody wanted the tech stocks a couple months ago. Nobody. We're 30% off the lows. Now people are starting to realize that there's some great opportunity there. The NDX, the sector, the tech sector, is 20% off the lows. So it's not quite as fast as Microsoft and Apple, and it's 20% off the highs. It's been trading between 11,000 and 13,000. A breakout here, targets 15,000. Again, I can't say enough. Let's trade what the market's telling us. Stop thinking, Phil. Let's trade what the markets tell us.
I think if you look at what the market's telling you, it's that they're seeing a flight to quality in these bigger tech stocks that now are pricing in the possibility of interest rate cuts instead of interest rate increases. That's very bullish for the tech stocks. Let's face it, when the Fed was saying that they're going to be extremely aggressive, raising rates no matter what, that was not good for the big tech stocks. But you're also seeing something, the Silicon Valley effect. And why is that? Silicon Valley, the bank that failed, lent a lot of money to these tech startups, right? These little guys, right? Their stocks became a little shaky, right? Because they're a little concerned they can't get their money out of the bank. That benefited these bigger tech stocks. So you saw a flight to quality from the smaller stocks to the big stocks, just like you saw from the smaller banks to the big banks. That's why they're outperforming right now.
It's called rotation. Let's remember, like a year ago when the Dow was leading the way. It's not the Dow anymore. It's the tech. Money moves, and it's moved into the sector, which has been very solid.
On to your bonus round question for today. Can you correctly name the car that I owned that will end production in January? Is it the Nissan Pulsar, Chevy Camaro, or convertible Chrysler LeBaron?
I'm going to say the convertible Chrysler LeBaron.
Yeah, I see Angie driving around campus in a Suzuki Sidekick. That's what I remember from back in college. So I'm not sure, but yeah, I'm gonna have to go with that. LeBaron is going out of business.
Well, I own them all, but the Chevy Camaro is going to end production of that car as we know it. It will become electric.
Ooh.
No, I need a picture. We need a picture. Put the picture on the show.
Let's just say I like to zip around, and my dad and I negotiated the price on that new car all the way down to $9,000, clearly years ago. Business First AM zooms back after this. Go to businessfirstam.com for where to see our show on TV.